Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, it's a new week. Happy Monday to you guys, and trust you all had a wonderful weekend out there. And today is another fresh day, a fresh new week, as we are going to be taking another fresh new look at the financial market today. Well, before we kickstart the session, let's run through our daily routine to confirm that we are all on the same page. If you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. Your highs will obviously give me a positive feedback that we are good to go, and then we can start the session. Thank you very much as you do so. While I load up my comment box, I want to see your feedbacks, and let's kickstart the session. Thank you very much. All right, all right. What do we have here? I can see a handful of comments. Thank you very much, guys, for your feedback. From Khalifa Kash to Motis, good morning to you. Leonardo DV, good morning to you. Trelos, trust you're doing very well. M244, good morning. Hello, Carrie. How are you doing today? Glad to have you around with us this morning. Kolesarim, 1979, good morning to you. And I guess with this handful of feedbacks, I want to assume that we are all on the same page. And in that regard, we shall be kickstarting the session. Thank you very much, Lexon 1, as we kickstart the Extreme Speed Live technical analysis session. Well, I want to welcome you back once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we will be deliberating on the financial market using our fundamental, of course, basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. Get ready for an insightful live technical session as we kick off a brand new week with a thrilling twist. Guess what? We've got a new addition to our watch list, and that is the USDJPY, which we haven't been doing in the last 5 months now, and that was as a due to the um, uncertainty about the Bank of Japan's intervention on that particular asset. That was during the month of September stroke October. So as a result of this uncertainty, we had to leave that asset for a while. But this time around, I'm beginning to see some new setups gradually unfold on that chart, which I am willing to share with you today and see how we intend to position ourselves for today's trading session. And last week was nothing but an interesting one, actually. We nailed it on multiple fronts from the US Tech 100 to the US All Sports and the GBP USD. We navigated this market fairly well. Sure, we faced some challenges initially with the XAUUSD, which of course did hit three stop losses during the course of the week. But staying true to our analytical approach, we seized the final breakout of that 2035 level and not only recovered the losses we incurred, but also added some sweet profits on top of it. For this week, it promises to be nothing short of exciting, as we do have some assets I have personally that I have prepared for today. And in fact, this is a great opportunity for you to give me in the comment section whatever assets you want us to look at, any financial asset you want to look us to look at. This is the appropriate time for you to drop them in the comment section, be it cryptocurrency, options, currency assets, commodity assets. Feel free, drop any if you have Let's see how I can incorporate it into our plans for today. This week promises to be an exciting one. The financial landscape is shaking things up, from escalating geopolitical tensions in the Middle East to the possibility of a Fed interest rate cut as early as the month of March. So we are here to strategically position ourselves for the new trading opportunity this twist brings to us. So I encourage us to stay tuned in, do not blink, so you don't miss out on the game-changing ideas we have on the table today. For those of you who are joining us for the first time, you are highly welcome on board, and I'm very, very excited to have newcomers in the house. And I do know that you will be wondering what this is all about. What is it that we are really doing on the Extra Speed Live? Well, as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York sessions. The session kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on the valuable ideas we will be deliberating on today. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we shall be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that are likely going to be affecting the market sentiment today. And for those of you who have been with us for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, based on the assets I have on our watch list, though I'm yet to get any new assets that anyone wants us to look at for this week, but based on the ones I have on my watch list for this week, we shall be focusing on the United States and the Japanese economic docket. Now, for today, January 15th, that's Monday, we do not have any high impactful event. And in fact, I went further to include the medium impact event so that we can at least have an idea into what may be serving as a catalyst for the market sentiment, but yet there is none for today, Monday, January 15th. So what we will be doing during this session is to rely on our technical skills to strategically position ourselves for the next move. So I see your comment, Trollo, and do good morning to you guys. Glad to have you around with us this morning. So with that being said, and with the information we have gathered thus far, let's dive right into the business for today. Now, as usual, it's going to be taking quite a while before my asset here opens up. So, okay, it has finally done so. So please give me a moment. All right, sorry for the break in transmission. I had to sort out some personal issues here, but I'm glad I'm fine and everything is okay right now. So the first asset we are going to be looking at this morning is going to be the US All Spot. And on the US All Spot, we had quite some interesting situations last week. Remember, throughout the course of last week, we have been buying this particular asset as a result of the escalating tensions in the Middle East, which incites the concerns as regards to the oil disruption from that particular area. And going into the new week, there has been quite a lot of new developments in the financial landscape, which has been driving the market sentiment in this environment, especially on the US All Spot. And before we go into the technical details, it's important that we also familiarize ourselves with what is really going on behind the scenes that is affecting this asset. Though the new week has started on a strong bearish note, trading around the $72 area since the Asian session. And of course, potential further gains may likely come in, but we are not sure of what is going on right now. But the concerns about over the Israel-Gaza conflict is intensifying after the Iran-led Houthis fired a cruise missile at the U.S. Laboon in the Red Sea earlier this morning, and the missile was actually intercepted by the U.S. fighter jets, averting harm to the Navy vessels or aircraft as well. Now, following Friday's U.S. and United Kingdom military attacks on the Houthi targets, tanker owners rerouted away from the Red Sea. And at this point, market participants will are anticipating potential disruption in the Strait of Hormuz and closely monitoring Iran's response, especially after the Houthi militia threatened a strong and effective response to recent strikes. And to make things a little bit positive for the buyers is the comment by the US president yesterday, where he expressed concerns over the Middle East conflict, potential impact on oil prices, and the heightened tension fueled by the US and United Kingdom airstrikes in Yemen. So with all these parameters, things are looking very bullish from a long-term perspective if we consider what is going on in the Middle East. And of course, when there is this kind of tension around this area, there's always a high concern that there is likely going to be oil disruption. And when there is this, there is always an increase in demand, which may not meet up with the supply. And if this continues, there is a high chance that price may rise to the upside. Now, with the information we have gathered here, let's scale up into the daily time frame and let's see things from a technical standpoint. Now, the structural market structure here on the US All Spots of last week still remains very much intact. And for those of you who are with us during the course of last week's trading session, you will be familiar with the setup as things has not really changed from the higher time frame. Now, on the daily time frame, what we did here was to take into consideration the nature of price action in the last 4 months, and it's quite clear that price action has been on a strong bearish momentum since the month of September. And when we connected the series of lower highs, we have this beautiful descending trend line to work with, which of course had played a major role in pushing price to the downside. And whenever we have a descending trend line like this, we usually continue to look out for more selling opportunities as long as price remains below the descending trend line. However, something interesting happened during the first week of the month of December, where we saw that despite the strong bearish momentum, sellers were finding it difficult to break through that area around the $68 and the $69.50 zone to emphasize the strength of the buyers. And fast forward to the early days of this new year, we saw another rejection of that area, and in fact, we saw how price action transitioned to find a higher low, giving us a situation where we could be looking out for a reversal pattern at this point. Now, if we take a closer look at the structure, you will see that price action appear to be transitioning into a reversal setup in the form of a double bottom structure where the neckline of this reversal pattern interestingly shares a confluence with our key level for this week at the $75 area. And you know how we use our key levels in this community. We want to see price break out our key level for us to look out for buying opportunities. And if continued selling pressure persists below the key level, we shall be looking out for patterns and structures that supports the idea of selling. And one interesting thing about our key level and the neckline is the fact that it also shares a confluence with the descending trend line here. Now, if price breaks out of the neckline, which happens to be our key level, price will also have broken out of the descending trend line, which will validate the reversal pattern and of course give us a signal that the trend line may no longer be able to negate all bullish attempts like it has been doing in the last 4 months to incite a good buying opportunity in this market. So we want to see price break out of that neckline, break out of the trend line, and of course our key level for us to feel comfortable buying this asset. So what we see on the daily time frame is more of a reversal pattern. Now, to make things easier for us to position ourselves for the next move, I have a simple setup on the 4 hours time frame. Now, on the 4 hours time frame, we begin to see things more clearly. And on the 4 hours time frame, you will see here, after considering what has been going on in the last 1 month, you will see that price action had uniformly and consistently found higher lows, giving us a temporary ascending trend line to work with. And as long as price remains above this ascending trend line, we shall maintain a bullish bias, especially after considering the fundamental factors behind the scenes. Now we have a $72 level area which shares a confluence with that trend line. So we shall use this key level, this level here is not a key level. Our key level for the week is the $75 area. So we shall be using this $72 area to understand if the market will be going south or it's going to be serving as a platform to push price to the upside that will lead to the breakout of our key level at the $75 area. Now, to have a better perspective into how to position ourselves for today, let's scale down into the 1 hour time frame so we can understand how market participants are thinking at this point in time. So right here on the 1 hour time frame is a simple setup after monitoring how participants in the market has been reacting to this market structure since the beginning of the week. And what we saw here is quite interesting, as you will see in the last 1, 2, 3, 4, 5, 6, 7, 8, 9 hours, price action had remained confined within the $73 area and of course the $72.40 level to emphasize the uncertainty going on in the market right now. And with the situation we have, especially when we have a flat range identified on our market structure, you know how we do it. We exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy or break down the support line to give us an opportunity to sell. And with what is going on here in the last couple of hours now, you will see price has finally broken down the support line at the $72.40 area to incite a bearish signal. And for those of you who capitalize on this opportunity, well done and kudos to you. But for those of us who missed out on this one, it's okay. The week is still very early and there are still chances that even this bearish signal could turn out to be a false one. So for those who missed out, let's see if the market will come back to probably do a retest of the breakdown of the support line to give us an opportunity to join the downtrend continuation. So as it is right now, we shall maintain a bearish bias since price just broke down the support line for the week at the $72.40 level, and we continue to look out for more selling opportunities in this market. Now, the previous low we have here is somewhere around the let me use my line chart here to have a precise point of entry. So we have the $72 area, so we have another level at the $72 area if price can break down and retest the structure, we shall be looking out for more opportunities to maximize this bearish move. So you do want to be marking out this level on your chart. So I will just label this one 72.00, and if price can break down that level, we shall be looking out for more opportunities to sell this particular asset today. So this is what we shall be looking out for, selling opportunities on this asset. Of course, let's see what will happen here. However, if at any point in time we get taken out of the sell position in such a way that price finds higher highs and higher lows, breaking out of the resistance line at the $73 area, then at that point we want to be considering buying and then looking out for more opportunities at the breakout of the $73.50 level to maximize the potential of that bullish move. And we hope that price may go on to break out of the key level, which happens to be our neckline of the reversal pattern identified on the higher time frame. So this is my view on the US All Spot for today, as our center of focus is basically between the $73 area and the $72.40 level, where the breakout or breakdown will give us an insight. And of course, we already have a breakdown giving us a bearish signal. Let's see if there will be a retest of the structure to incite more selling opportunities today. So this is my simple view. If you have any questions as regards to the current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on to the next asset on our watch list. I see you, Ricky86, Nello, and Cap the Fitax, and Fast Rashid. Good morning to you guys. Glad to have you around with us. So moving on. So the next asset on our watch list for today is the USTech100, popularly known as the Nasdaq. And in fact, we had quite interesting situations going on in this market. Last week, we had the privilege of joining both buying and selling opportunities as price action hit a new high at the 16,910 area. And since price got into that 16,910 area, we have been noticing how buyers have found it difficult to break through that particular area, hereby giving us some choppy situations in the last how many days now? In the last 2 to 3 days in this particular market. Now, as we prepare for the New York session today, how do we intend to capitalize on the next move that is likely going to happen today? Now, to do this, we'll first of all scale up into the higher time frame so we can have an holistic perspective into what is going on in this market. And what I did here was to consider the nature of price actions in the last 4 to 5 months, I think. And it's quite obvious that price action has been very, very bullish. And as a result of this bullish momentum, we have a couple of ascending trend line, which has been supporting this momentum in the last 3 to 4 months. Now, of course, price remaining above the ascending trend line makes a lot of sense for us to continue to look out for buying opportunities. However, if we zoom into this current structure, taking into consideration what has been going on here since the mid-month of December of last year, you will see how the $17 level, which happens to be a strong psychological area, has been a barrier for buyers in this particular market. And if we look into the later part of last week's trading session, we saw how it became difficult for buyers to continue the momentum as price continued to stay below that $17 area. And in fact, if we are not careful, this whole situation could transition into a reversal pattern, maybe in the form of a double top structure where the 16,200 could serve as the neckline to incite a downtrend move, which could be a reflection of profit taking activity. But we are not jumping into conclusion yet, as we will keep our options as open as possible so that we can be on standby to capitalize on whatever happens in this market. Now, to make things easy for us, we have our key level identified around the 16,700, which has played a major role in determining the direction of price action in the last 3 to 4 weeks now with our key level at the 16,700 and prices remains above the key level, let's see how we will position ourselves for the next move. Now we have two factors here. One, prices above our ascending trend line, supporting a trend continuation to the upside. And of course, price remains above our key level, supporting the idea looking out for buying opportunities. However, we cannot ignore the potential that sellers could come in, as you will see how the $17 area, $17,000 area had played a major role in negating all attempt by the buyers to break out of that structure. Now, when we scale down into the 4 hours time frame, you see I have a simple setup here that we will be using. So the ascending trend lines remains very intact, as you will see. And then let me zoom into the current structure. Now you can see above our key level, the 16,700, that is it right here. So price still remains above the key level. And you will see that since Thursday's trading session, you see how the 16,870 had continued to negate all attempt by the buyers to break out of that structure. And even this morning, we saw rejection of that area again. So now we have a range where price is confined within the 16,870 and the 16,700. Now, if price can break out of the 16,870, we shall look out for buying opportunity. And if price can drop below the key level at the 16,700, we look out for selling opportunities. Now, with the consolidation phase going on here during the second half of last week, let's see how the market has been reacting to the 16,870 level since the new week has begun. Now, when we scale down to the 1 hour time frame, we have a clearer picture of how market participant has been reacting to the 16,870. Now, with what we have here, the first thing I did this morning was to acknowledge the bullish momentum that gripped this market since last week Friday, especially after during the New York session. And given that we have an ascending trend line to work with, as you will see here. Now, in addition to this ascending trend line is a range where we will see that price action had remained confined within since the new week has begun. That is between the 16,850 and the 16,800 before it expanded into the 16,870, as you will see here. So we have a wider range to work with at this point in time. And of course, you know how we do it in this community. Whenever we have a range like this, we want to exercise patience and wait for either the breakout of the range to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. And with the way things are going based on what has happened in this market in the last 2 to 3 hours, it is quite clear that the ascending trend line we have here has already been broken to the downside. Now, will this be a platform that will incite a sell-off today? Well, let's see if the market will come back and retest the structure, as we will see how the 16,870 has become a strong selling niche in this market. Look at it going back to as far back as I don't want to go too far because of the 1 hour time frame we are going to as far back as Thursday. You will see how that area has continued to be a strong selling niche in this market. So if the selling pressure persists here, the breakdown retest of that newly identified ascending trend line will be all we need to be part of a bearish momentum. And if price action continues to the downside, breaking down the 16,800, the support line of this range we identified here, we welcome more selling opportunities to maximize the potential of the bearish move. However, in as much as things are looking very bearish at this point, we cannot ignore the potentials that buyers could still take over the market. And in fact, the breakdown of this ascending trend line could turn out to be a false breakdown. Now, for me to consider buying this asset today, I would rather want to see price action take out all the sell positions around the 16,870 and the 16,850. In fact, I would like to see some significant confirmation. As you will see in the past, price had broken out of the structure before, but ended up being reversing to the downside, as you further emphasizing the strength of the sellers around that area. So if I want to buy, I would like to see something like a breakout retest of that structure to feel very confident taking advantage of any buying opportunity from there. So this is my simple view on the USTech 100. And in fact, if the market does not come back to retest structure, but instead continues to drop to the downside, then a breakdown of the 16,800 will welcome selling opportunities. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So between the 16,870 and the 16,800 is where our center of focus will be today, and depending on the breakout or breakdown will give us an idea of where price is likely going today. So let's be on standby to capitalize on this one. If you have any questions, feel free to let me know in the comment section. And if you need some clarifications, let me know. I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY. The first time we will be taking this asset in the last 4 to 5 months. And I'm beginning to see quite some interesting situation which is going against all odds in this market. And I'm very excited to share them with you. Now, before we go into the technical details, you will see from an holistic point, the new week has started on a strong bullish note. The PI is trading above the 145.700 at this point in time. And of course, we do have potential buying opportunities despite the recent dip in the US dollar and of course your treasury bond yield And today's market is anticipated to remain subdued due to the US bank holidays. I forgot to mention that earlier. Today is the US bank holidays, and we are likely going to be seeing a reduced trading activities due to the observation of this holiday. Now, it is essential at this juncture that we also consider the prospect of the Federal Reserve initiating interest rate cuts, which might limit the upside potential and pose a challenge for the US dollar. Meanwhile, the Bank of Japan is expected to maintain its ultra loose policy stance, which may affect the growth of the yen, and I think the US dollar might take advantage of this to push price to new highs despite the weakness of the dollar across its major peers. Now, currently, our focus remains on identifying buying opportunities. As you will see, the week has been on a strong momentum, and since last week Friday, we have been seeing some series of higher lows. Now, before going into the details on the 1 hour time frame, let's have a quick holistic perspective into what has been going on in this market in the last 1 year. Now, since January 2023, it is quite obvious that price action has been on a strong bullish momentum. In fact, I have a couple of ascending trend lines here after connecting the series of higher lows to further emphasize the strength of the buyers in this market. Now, you'll see connecting this, we have the trend line here, which is one of the trend lines we are using for today. And of course, projecting this further, we have another one here, which is the major trend line. Now, in addition to this trend line, I want to show you what has been going on here in the last 1 year, 3 months. Price tested the 152.00 level first time in the month of October of 2022, and we saw a year after, we saw price action come back into that area to form a double top structure to incite a bearish momentum back into that ascending trend line. And since the beginning of this year, price action has respected the ascending trend line to push price to the upside. Now, the question going into this new week is, will the respect of this ascending trend line become a new platform for new highs? Well, to answer that question, I have a key level that we will be using to guide our trading decisions for this week. In fact, I have a couple of key levels in this case, which is a one of a kind scenario, as I was caught in a dilemma as to which of these levels we shall be using for this week. And if you look at the structure closely, you will see that area around the 144.00 level and the 144.800 area had played a major role in determining the direction of price action in the last 7 months, I think, since the month of June last year. You will see how this level at some point in the month of June was serving as a strong selling niche before price finally broke out of the structure in the month of August of last year. And since then, price had continued to remain above this level for a while. I think between the month of August, September, October, November, and on the second week of December, we saw price break down the structure, traded below the structure for a while before testing that ascending trend line. And since the beginning of this year, we have been witnessing a bullish momentum in this market, leading to the breakout of that key zone one more time. And as it is right now, price remains above the key zone, and as long as to be looking out for patterns and structures that supports the idea of buying this asset. So our center of focus for this week is going to be around that key zone, where depending on how market participants react to that structure will determine if we will join that uptrend move or get ready to join a decline to the downside. Now, to have a better perspective into what is going on here, we scale down into the 4 hours time frame, and right here on the 4 hours time frame, we have a simple setup. And what I did on the 4 hours time frame was to take into consideration the nature of price action in the last 4 to 5 weeks. And in fact, it's clear that price action has been bullish. But before the bullish momentum, let me quickly share with you this bearish momentum after price tested a 152.00 area, giving us this descending trend line, which was finally broken at the beginning of this year to break out of that structure and incite that momentum to the upside. Now, with our ascending trend line intact, that is this ascending trend line here that led to the breakout of the descending trend line, I'm of the opinion that we'll continue to look out for buying opportunities as long as price remains above that structure. But there's one thing I would like to call our attention to, and that is the breakout of that descending trend line that happened at the beginning of this year. And from a technical standpoint, when price breaks out of a key structure such as this descending trend line we have here, we expect that at some point price may come back to retest the trend line that was broken to incite another wave of bullish momentum. So if it so happens this week or in the nearest future that price breaks down this trend line, we could see a retracement back into the structure to incite an uptrend continuation. So I'm just calling our attention to this so we can keep it in mind while we continue to monitor price action. So right now, we still hope that price will continue to the upside. Our key level still remains intact at the 144.800. Price still remains above the ascending trend lines, and all factors here are screaming towards a bullish opportunity. Now let's scale down into the 1 hour time frame so we can see how market participants reacted to that key level at the beginning of this week. Now on the 1 hour time frame, you'll see, look at the key level right there. Price has remained above the key level. Let me just bring this in a little bit so that we have something neater. Okay, and look at the ascending trend line, very much intact. And interesting enough, I was able to capitalize on a buy position this morning after seeing how price action remained confined within the 145.240 and the 144.870 for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours before the breakout of the resistance line happens. And you know how we do it in this community. Whenever we identify a range like this, we exercise patience and wait for price action to either break down the support line to give us an opportunity to sell, or the breakout of the resistance line of that range to give us an opportunity to buy. And for me personally, I had to position myself above the 145.240, triggering my first buy position, and then added another one at the breakout of the 145.550 level. And if you in any way had capitalized on this bullish momentum, that is so wonderful of you, for you to have used the knowledge you've acquired in this community to identify that structure. But for those of you who had missed out on this opportunity, it's okay. The week is still very, very early. There's no point beating your head over this, as we could still have some more opportunities to capitalize on for this week. And of course, one of the things we are going to be looking out here, since the breakout of the structures has happened, is the chance that price may still come back to retest the structure, which of course is in line with an ordinary technical expectation that when price breaks out of a structure, it may come back to retest the structure in anticipation of another wave of bullish momentum. Now, as it is right now, the question is, which of the structure is going to be retested? Is it going to be the 145.550 that will be retested to incite an uptrend move, or we will see a breakdown of the structure to see price come back and retest the 145.240 to incite an uptrend move. Well, I know it may be a little bit complicated like this whenever this kind of scenario comes up, but we have ways through which we usually position ourselves to capitalize on buying opportunity. And one of the things we look out for when price comes back to retest structure is a reversal pattern that shows and gives us an idea that price is going to climb to the upside. And one of the things we will be looking at if price comes back to retest any of the structure, it's something like a reversal pattern, maybe a double bottom structure or a head and shoulder pattern around that area to give us an opportunity to buy. So once we can identify a reversal pattern, we mark out the neckline and then buy the breakout of the neckline. So it could be right here at the 144.550. If it so happens around that area, we mark out our neckline and then buy the breakout of the neckline. And in fact, if it comes to the 145.240 area, well, we also look out for the neckline of the reversal pattern here to join that uptrend move. So that is how we will be managing any bullish expectations at this particular point in time. And if price action continues to climb and find new highs, we have another level around, let me see, the 145.800, which we want to be using to maximize the potential of this bullish move. So if price goes on to break out of the 145.800, we will be adding more positions to our existing trade. And remember this level that we identified on the higher time frame at the 146.500, a breakout retest of that structure will as well welcome more opportunities in this market. So let's see how the market will play out. We have multiple levels here that will be guiding our trading decisions for today. So we maintain a bullish bias on this particular asset. However, in as much as we're looking out for buying opportunities and considering the fundamental factors we did mention earlier, one of them which is the prospect of the Federal Reserve initiating interest rate cuts as early as the month of March, which has a tendency of limiting the upside potential and pose challenges to the US dollar. So we cannot ignore that fact. I still believe that the dollar on the USD/JPY market is more or less taking advantage of the ultra loose policy stance of the Bank of Japan to ride this move to the upside. So I still see a limiting factor to the growth of the US dollar. Now, if it so happens that this factor affects the dollar, we could see selling momentum come in this market. And if I want to sell this particular asset, I would rather want to see price action take out the key level or the key zone area, which is around the 144.870 and the 144.800. And in fact, I would like to see some confirmations like a retest of structure before I join the decline to the downside. And remember, while we sell the breakdown of the structure, we want to take note of this ascending trend line we identified on the higher time frame. Now remember, we had an ascending trend line on the higher time frame which buttresses the strength of the buyers. Now if we sell and price continues to drop into the ascending trend line, as soon as we get price close to the ascending trend line, kindly move your stop losses, secure the current sell position while we wait and see how the market is going to react to that trend line. A breakdown retest of the trend line will definitely welcome selling opportunities, as that will be a sign that the trend line may no longer have the capacity to negate the bearish attempt. However, if price gets into the trend line and we see it transition into a reversal pattern, and we see buy pressure and price transition maybe to a double bottom structure, we shall be buying again above the key level. So this is how we're going to be managing our positions on the USD/JPY. I will only look out for selling opportunities if price action will break out and take out that zone around the 144.870 and the 144.800 area. And remember, I said we are looking out for confirmations before jumping into the sell position. But in the meantime, price remains above the resistance line of the range we identified here, so we'd hold on to a bullish bias as it is right now. But if it so happens the price drops and break down, then we will look out for selling opportunity. But in the meantime, we maintain a bullish bias. If you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. As always, I will take the next 5 to 10 seconds off to see if there are any questions before we move on to the final asset on our watch list for today. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. Hello, Nest57, good morning to you. Isaiah Ho 168, good morning to you. Reedy, good morning to you guys. Trust you guys are doing very well. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the final asset on our watch list for today. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And last week was a very challenging week mentally, psychologically, and emotionally for us all in this community, as we had three setbacks after capitalizing on three buy positions during the course of the midweek, which and all of which went into a loss before the final day of last week, when price did finally broke out of the $2,035 area, making us scoop in a significant amount of profit, hereby recouping the losses we incurred, and of course making some sweet profit on top of it. And congratulations once again to all of you who stayed faithful to our analytical approach, and if you had done so, you must have recouped and recovered the loss we incurred during the previous week. So once again, well done to you guys. And as it is right now, the price of gold has continued to gain traction since the beginning of the week. It started the week on a strong bullish note, with gold prices marking their third consecutive day of gains. Now, the surge in the safe haven asset can be attributed to a rise in risk aversion amidst escalating geopolitical tensions in the Middle East and speculations around potential rate cuts by the Federal Reserve in the month of March. Another factor is the heightened concern over the Israel-Gaza conflict, compounded by the Iran-led Houthi Red Sea attack on Monday. It has intensified the demand for gold as well. As a traditional safe haven asset during geopolitical uncertainties, gold has gathered increased attention, and market watchers are on high alert for potential disruption in the Strait of Hormuz and closely monitoring Iran's response to the recent development. Now, on Friday last week, after our live session, we had the Barclays analysts expressing an expectation for the Federal Open Market Committee, FOMC, to reduce the Fed fund rate by 25 basis points, moving the anticipated timeline from June to March. Now, this shift in outlook has tilted market sentiments toward expectations of a Fed easing, exerting downward pressure on the US dollar. At this juncture, we need to be very, very careful here, but things still look very bullish for the gold assets at this point in time. Now, let's quickly take a review of the higher time frame so we can have an holistic perspective into what things are looking like from a technical standpoint. Now, scaling up into the daily time frame, what I did here was to take into consideration the nature of price action since the month of April of last year. That's about 8 to 10 months of historical data, which actually gave me the key level at the $2,035 area. And for those of you who were part of our live session last week, I remember the $2,035 area was the key level we used. And it appears that the same level is still holding sway, as you will see how this level had played a major role in determining the direction of price action since the month of April of last year. More or less, it has been a very strong selling niche, as you will see. Price every time buyers come into the structure, we saw how sellers have continued to negate all attempt by the buyers to break out of that structure. Fast forward to the month of November, though we saw price break out of that area to find an astronomical high at the 2145 area, but we saw price reject that area sharply. And if you look at the nature of price action within this area since the month of November, you will see how that area has been holding some selling potential around that point. However, due to the geopolitical tensions in the Middle East and uncertainties in the global landscape, safe haven assets tend to thrive during this time. And of course, we saw how price broke out of the $2,035 finally on the last trading day of last week. And going into the new week, the question is, will the $2,035 level become a new platform for buying opportunity? As you will see, price sits just robustly above this ascending trend line we marked out here. Now, to make things easier for us, I have a setup on the 4 hours time frame that will give you a sense of confidence in looking out for buying opportunities in this market. Now, scaling down into the 4 hours time frame, this is the first thing I noticed here. Now, since the mid-month of November, you will see how that area around the $2,015 level and the $2,025 area had played a major role in negating all attempt by the sellers to break out of that structure. Every single attempt by the sellers to break through since the mid-month of December last year has been met with strong resistance from the buyers, as you will see here, making this zone a strong demand zone to use and guide buying opportunities going forward. Now, to make things more interesting is the fact that price broke out of the key level. Again, that buttresses the strength of the buyers further. And then we saw how price broke out of this descending trend line. As you will see, since the beginning of this year, the price of gold had uniformly found lower highs and lower lows in this market. Now that price action broke out of both the trend line and the key level at the $2,035 level, what is at stake for us for this week? Well, if we look at things from a technical standpoint, after price broke out of the key level and the trend line, we expect that at some point in time price may come back to retest the trend line that was broken, which interestingly falls within that demand zone between the 2015 and the 2025 to incite an uptrend move. Now, will this happen today? Well, we are going to be looking at that in detail when we go to the 1 hour time frame. So if bearish momentum happen here, it could be a form of profit taking activity, which would reflect on the chart as a retracement move, maybe into the 2035 or that demand zone to incite an uptrend move, dovetailing to a minimum of 150 pips to a maximum of about 300 plus pips to catch here if price drops to the downside. However, it is not all the time that price action retraces back into the trend line that it broke out of. Instead, we could see price transition into an uptrend continuation pattern. It could be a bullish flag, it could be a pennant, whatever it is, it could be a bullish rectangle pattern, breakout retest of the resistance line, could welcome more buying opportunities. So with these ideas we have on this chart, let's scale down into the 1 hour time frame so that we can see how market participants have been reacting to the structure since this new week has begun. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. Now, look at the structure here since the week has begun. The first thing I did here was to first of all acknowledge the momentum, the bullish momentum since last week Wednesday, as you will see. And after connecting the series of higher lows, we have a beautiful ascending trend line to work with. And as long as price remains above this ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying, and not only buying, looking for ways to add more positions to our existing buy positions. However, if this trend line gets broken to the downside, then we could start considering the selling opportunities we saw on the higher time frame and looking at a TP target around the 2035 level, that is the key level, and of course the demand zone we identified on the 4 hours time frame around the $2015 area. Now, in addition to this trend line here, it is quite clear that the week started on a bullish note as we saw price started the week around the 2046 area and then climbed into the 2058, where we have noticed some barrier as buyers find it difficult to break through that structure, giving us a range to work with. And of course, you know how we do it in this community. Whenever we have a range like this, we exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And with the way things are going right now, it makes quite a lot of sense to continue to look out for buying opportunities. If price breaks out of the 2058, having a buy stop order above that structure makes quite a lot of sense, and having a stop loss right below this ascending trend line, which will be dovetailing between 75 to about 90 pips stop loss depending on where your entry point is. And then if price continues to climb, breaking out of the $2062.25 level, we shall look out for more buying opportunities in this market. However, if the selling pressure here persists, remember since last week Friday when price tested at high at the $2062.25 area, we have seen how it has become difficult for buyers to even break out of that previous high. Now, if this continued selling pressure persists, then a breakdown of the support line of the range at the $2046 area could welcome selling opportunities. And if price continues to the downside to break down our key level at the 2035, we shall look out for more opportunities to buy. So as it is right now, this is what we will be using to guide our decisions for today. And in fact, we could actually take advantage of any selling opportunity even before the $2046 level is broken. That is, if the ascending trend line here gets broken at some point, a retest of structure where I think we can have a level around the $2053 area to serve as a form of confirmation. That's $2053 level to serve as a form of confirmation for selling opportunities at this point to join that decline earlier before the breakdown of the $2046 level happens. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And it's on this note I would like to round off on the XAUUSD. If you have any questions or you need some clarifications, feel free to let me know in the comment section. So as always, I will just take the next 5 seconds to see if there are any questions, after which we will round off on today's X-Trend Speed live session. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And in fact, it has been a wonderful moment with you guys today, as I really enjoyed every single moment I had with you guys. And I do hope you are able to gain one or two things from what we discussed here today. Today's session has been quite inspiring as we were able to take on four major financial assets today, including the US All Sport, the USTech 100, and our newly introduced asset, the USD JPY, and of course the XAUUSD, popularly known as the gold spot, and all of which we were able to identify simple trading setup using our basic tools such as trend lines, key levels, and chart patterns only to strategically position ourselves for the next move. And I do hope you marked out your levels accordingly as we did during the course of the session. And if you did, I encourage us all to allow the structures to mature before jumping into any positions. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So in that regard, and with this understanding in mind, you want to ensure you have a well-defined risk management strategy in place so that you can use it to mitigate against any risk on your portfolio. So with that being said here, it has been a wonderful moment with you guys. I really appreciate every single moment. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here during the Extreme Speed live session. And if you do, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So on this note, I wish us all the best of luck, and I look forward to seeing you all same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and at the same time prepare ourselves for tomorrow's trading session. Do have a wonderful evening, everyone. Trade smart, trade consciously. Bye bye.